Holy flippin' smokes, everyone. We need to talk about right now what the Federal Reserve just did and what happened in the markets today. Because people, there was some big news today. There's some big pivots happening in the markets right now, some big shifts. So in today's video, this is an urgent one. You know, I'm in the car here, just cruising down the street. You know, I was in a big hurry, but I thought we got to get this video out and talk about what happened in the markets today. So, is this just FUD? Or should you sell everything? Go all 100% in cash? Is this crash going to get worse? We're going to give you an unbiased opinion here, everyone. Or should I say, I'm going to give you an unbiased opinion here, everyone, to say what is really happening. Okay, so first things first, what happened in the markets today? Well, what happened is the 10-year US Treasury yield hit an all-time high. It's nearly at 2.6% now. Now, what that's caused is it's caused mortgage rates to go above 5%. That's right, we're now seeing mortgage rates above 5%. So hopefully, if mortgage rates keep going higher, that will, you know, put some cold water on this crazy housing market. And hopefully what this will cause is sellers to see, okay, look, this may be close to the top. Maybe I'll put my property on the market now, or my home on the market now, my investment property on the market now, before interest rates rise and before, you know, home buyers, instead of having, you know, that FOMO, you know, they won't have that FOMO anymore, and then they may not be able to get the best price. And what that will do, hopefully, is lift inventory to bring these crazy house prices down a bit. Not calling for a huge housing market crash, unless, which I'll get into later in the video, something else happens. Now, what happened with stocks today? The Nasdaq dropped over 2%. The S&P was down almost 2%. The Dow was down about 0.8%. We saw crypto down a bit, down to around $44,000. Bitcoin, should I say? So there was a bit of fear in the markets today. Now, what we have to know is what caused this, and is this a new risk that we haven't already known about, or is this just simple profit taking? Because remember, over the past few weeks, we've seen a massive rally. We've seen a massive rebound. You know, the markets hit a low on around March 14th. And then since then, you know, the Nasdaq's rallied around, you know, 15%. S&P's rallied around 15%. There's many stocks, the high speculative stocks, because remember, they're the first to sell off, like I explained, but they're the first to rebound. We saw Tesla, you know, go up about 50% since March 14th. So we're seeing this crazy rebound, and we've just seen this continuous rally the past few weeks. So what caused this sell-off today? Again, what we have to get into in today's video. Well, first things first, what happened is one of the Fed chairs, I believe it's Bernard, correct me if I'm wrong, because I'm just going from memory here, guys, but one of the Fed chairs, who's normally dovish, that normally means that they want to keep interest rates low. They don't want to rush to lift interest rates. They don't want to rush to sell off the Fed's assets, and they want to keep the good times going. Now, dovish means, you know, like James Bullard, who's hawkish. James Bullard's very hawkish. He wants to, you know, lift interest rates 0.5 percentage point or 1 percentage point and start selling off assets now. So that's hawkish. Someone that wants to be a central banker that wants to be more aggressive. Okay. So now what is happening is you're having the doves on the Federal Reserve. They're now coming out and admitting, you know, what we've all known all along. Okay, I think they've, you know, really been caught out here. They're looking pretty silly now with this transitory inflation talk. And then even after they acknowledged inflation is not transitory, let me just adjust something here. Even after they acknowledged inflation is not transitory, then they still tried to say, but look, you know, we still need more data. We're still unsure, you know, if this inflation is going to stay. Well, like I just went over in this morning's video, look what's happening with food prices. This is not a joke, people. This is not me spreading doom and gloom. This is me spreading straight facts. This is me spreading the truth. If you can handle the truth, yeah, well, I don't know what else I can do for you. And yeah, I don't think you'll be able to get any food, you know, when these shortages get real. So don't go knocking on other preppers' doors because you didn't prepare, okay? So yeah, first things first, they're acknowledging, okay, this is not, this inflation is here to stay. It's not going away. And now what they're saying is they're now saying, well, okay, I think we may need to get more aggressive. So the way the Federal Reserve works is, there's 12 chairs on the Federal Reserve, and they all vote. So if, for example, if you have more doves than hawks on the Federal Reserve board, well, then they're not going to lift interest rates and they're not going to taper anytime soon. But if all of a sudden all the doves start turning hawkish, then that means you're going to see more interest rate hikes, and there's a 75% chance of a 50 basis point hike in May. Now, I don't see any reason why not, because there's no meeting in April, so they might as well double it up in May and do a 50 basis point hike. Now, what they're also saying is that their taper, which means the $9 trillion Federal Reserve balance sheet, which went from $4.5 trillion to $9 trillion in 2020, 2021, and now 2022, they're going to sell off that at a much faster pace, they're saying, than 2018. And we all saw what happened in 2018 when interest rates went over 2%. We did start to see house prices fall in New York and California by about 10 to 15%. And we did see the repo crisis in 2019. And we saw the stock market enter a bear market, down 20%. Now, I'll get into it later in the video why we may have already had that. But that's why the markets are scared right now. Now, also another good comment that we got from the Federal Reserve, which finally they're speaking, the obvious, and that's a point I've tried to make on the channel. Who knows, maybe they're watching some of my videos getting some advice. Just joking, none of this is financial advice, okay? Also, just had to adjust something there. So what they said is that inflation, high inflation, could actually be worse than not having a job. For example, what would you rather? Would you rather be unemployed but still be able to survive on unemployment benefits, or work 2 jobs 80 hours a week to try to make ends meet and still not be able to make ends meet because prices are skyrocketing out of control and inflation is out of control? I don't know about you, but me, I would rather be on unemployment benefits and be able to survive because prices are going down, we're having deflation, than working 2 jobs 80 hours a week and still not being able to keep up with the cost of living because inflation is running hot. So that is a point, and that was a big point that the Federal Reserve finally admitted, that high inflation could either be as bad or even worse than being unemployed. And that's something I definitely agree with. Now, does this mean that, this is going to be the beginning of a catastrophic, 40-50% market crash? In my honest opinion, I don't think so. And let me tell you why. Like I've been talking about on the channel, and you know me, I never believe what central bankers say. And most of you never believe what the central bankers say. So when central bankers were saying inflation is transitory, there's nothing to worry about, I didn't believe them. I was, one of the few channels here in finance, saying that no, inflation's going to get worse. You had some people calling deflation, saying there's deflation coming, especially a lot of these very famous investors. Now saying no, of course there's no deflation coming. Well, now that brings us today. What the Federal Reserve is doing is they're saying, well, okay, inflation is out of control, so what we're going to do, don't worry guys, we're going to lift interest rates, we're going to taper our balance sheet, you betcha we're going to bring inflation under control. You know what I think? I call your lies. I call your BS. There's no way. I tried to give them the benefit of the doubt. I was hoping that they were going to lift interest rates and taper. But it's been over a year now, and all we've had is talk. It's like a guy, that's about to get in a fight, and he's got his friend holding him back, and he's like, let me at him, I'll go there, I'll smash him, go let me at him, I'll beat him up. But really, he's all talk, and he's only doing that because his friends there are holding him back. Well, I think this is what the Federal Reserve's doing. They're doing something called forward guidance, and they're jawboning the market. They're trying to tell the market, yep, we're going to get very aggressive. We're going to lift interest rates. We're going to taper. Inflation's going to go down, because then that lowers inflation expectations. So that's what I think they're trying to do. Now, I don't think, like I said, they are actually going to lift interest rates. And when the market realizes that they won't lift interest rates and that inflation is still going to stay high, and even, for example, if they lift interest rates to 3%, well, if inflation goes to 10%, like what we're seeing right now with food prices and energy prices, even with interest rates at 3%, it is still not going to put a dent in inflation anytime soon. Now, I do agree, eventually inflation will go away, but it's not going away anytime soon, and prices won't go down. All that will happen is the rate at which prices go up will slow down. Prices will still be sky high, and the Fed will say, look, inflation's falling. When no, prices aren't falling, it's just the rate at which prices are going up are slowing. So people, what this means for you and me in simple terms is, I don't think this is going to cause, a big crash yet. What I will say will cause a big crash, and what I am worried about is if the Federal Reserve is actually serious. Now, I don't think they are, but if they are actually serious and they do lift interest rates, say for example above 4%, because the markets are pricing in 2.5% to 3% now over 2 years, if they do go over 4% to 5%, well, that's a different story. I would believe would probably see a 20 to 30% correction and bear market in the stock market, and I reckon we'd see house prices fall about 20% because they are already overvalued, and the only reason house prices with this crazy high is because of low interest rates. But now with interest rates going up, people's borrowing power is going to be reduced by about 20 to 30%. And if interest rates go up for the hedge funds that have been buying up all these homes, they're not going to have as much firepower as well. Now, crypto, of course, I think crypto, like I continue to say, I think it's very correlated with the stock market. So whatever I think the stock market will do, I think the cryptocurrency market will follow similarly, especially more correlated with the NASDAQ high-flying tech sector. So if, again, same thing with stocks, if the Federal Reserve doesn't taper, I'm still seeing a melt up for Bitcoin, Ethereum, what I'm dollar cost averaging into. And I still think would see some decent gains for crypto, but the parabolic moves in crypto, I believe, will be 2023. So those that accumulate Bitcoin right now during the crypto winter, they will benefit massively, just like those that accumulated Bitcoin in 2019 before we saw the huge 2020 and 2021 bull market in crypto. And for those that are interested in cryptocurrency and an app to buy and sell your cryptocurrency and exchange, the exchange I use and I really like is FTX. I'll put a link in the description later in the video. That's where you can buy and sell cryptocurrencies, and instead of paying fees, you can actually earn cryptocurrency for every trade over $10. Use code MICHAELCOWAN. So everyone, that's just my thoughts and opinions on what's happening in the market today, why it sold off. I don't think there's going to be a big crash anytime soon unless interest rates go over 3.5% to 5%. But what do you think? Let me know. Thanks for watching. I'll see you all in the next video.